You're watching Dugoscopy TV for an update on the US economy with Michael Gregory from BMO Capital Markets in Toronto. Happy New Year, Michael. So let's begin by looking back at what happened before Christmas. Were you one of the many surprised by the tapering announcement at Bernanke's last meeting? And what have you thought of US markets over the last few weeks?
Well, we thought it was a bit of a coin flip whether the Fed would announce tapering to begin in January, and we saw it. So we were sort of half surprised, I guess is the best way sort of put that. But clearly markets have reacted quite positively to that. Obviously, bond markets have sold off a bit as the prospects for one of the largest purchaser of bonds over the past while is going to be paring back their purchases. The fact is that they're doing that in the context of an economy that actually seems to be gaining a little bit of momentum through the turn of the year. And I think that has more than sort of offset the prospect of diminishing liquidity addition in the equity markets, and as a result, we've seen stock prices continue to move ever higher. So it's been a mixed blessing, the tapering announcement for financial markets, but on balance, I think they've taken it in stride.
And speaking of consumer spending, what are your thoughts on the consumer confidence?
Obviously, businesses seem to be getting a little bit more confident. I think perhaps dealing with that budget impasse and the fact that we are beginning to see some bipartisanship emerge in Washington is making businesses that have been very cautious over the past couple of years begin deploying some of that record amounts of cash they have sitting on their balance sheet. So I suspect that sort of the orders propelled in terms of capital goods propelled activity in manufacturing will continue. Another aspect of this is the fact that we know that we had very strong growth in the third quarter, GDP up over 4%. Part of that was due, or at least a big chunk of that was due to a rise in inventories. And many people thought that was an unintended accumulation of inventories, and we would sort of pay the price for that in Q4 and maybe Q1. But perhaps businesses, just like they seem to be expanding their capital goods, maybe they actually wanted to increase their inventories, anticipating stronger demand. And quite frankly, consumer spending has been quite robust through the turn of the year.
And speaking of consumer spending, what are your thoughts on the consumer confidence data?
Remarkable surge. I mean, across all of the metrics of confidence, and part of that I think is the legacy of having 200,000 plus growth in payroll jobs in 3 of the past 4 months. We've seen stock prices move to record highs. Home prices continue to escalate, so there's a wealth effect, there's an income effect supporting that. But I think also, too, consumers, not as much as businesses, but nevertheless, we're still also looking at Washington and going, holy cow, not again. And the fact that they see sort of the adults taking over the political process rather than the children in Washington, I think was a bit of a boost, a confidence booster. And yes, there's still issues about the rollout of Obamacare and things like that, but I think consumers are also, showing some mounting momentum in terms of spending. And let's face it, that's 70% of the economy, 70% plus. So to the extent we see a stronger consumer, it means the overall economy is going to gather the kind of momentum, the self-sustaining momentum that the Fed is desperately wanting to see the U.S. economy achieve.
Michael, thank you very much for sharing your views with us today. Have a great weekend.